Kia ora, I'm Jo, Kiwibank economist. So inflation in New Zealand is running at 4.9%, which is the fastest pace since 2011. And price increases have been across the board. Everything from petrol to housing has seen a lift in prices. Now, global drivers such as rising shipping costs and high energy prices have certainly helped to propel inflation. And largely because of these factors, inflation is expected to remain elevated for some time yet. We're expecting strong price gains again over the coming quarters, with annual inflation hitting a peak of around 6% early next year. However, we've always said that these inflationary pressures should prove temporary. Global supply chain disruptions should eventually resolve as economies reopen, which should take the pressure off shipping costs. And there are tentative signs suggesting just that. For example, the Baltic Exchange Dry Index, which is a measure of global shipping costs, has halved since the start of October, and global oil prices have eased almost 4% in recent weeks, but it is still early days. Now, what's more concerning here in New Zealand is a domestically generated kind of inflation. Similar to the headline rate, non-tradables inflation is up nearly 5% over the year, with housing costs the main driver. Local demand has held up really well since coming out of last year's lockdown and despite the current Delta disruption. The labour market too has tightened massively, with participation continuing to rise and the unemployment rate falling below 4%. Now, the demand for labour remains strong. However, with the closed border, the pool of available talent is shrinking, so firms are having to pay up, and that's pushing up prices for goods and services. But in turn, higher living costs has workers wanting compensation. So just as inflation is forecast to continue rising, so too is wage growth. We're expecting wage inflation to lift further in the coming quarters and to peak at around 3.5% by the middle of next year. Now, this wage price spiral would be a concern for the Reserve Bank. From a price stability perspective, it's harder to control than temporary supply-driven inflation. So the Reserve Bank is likely to continue lifting the cash rate above its historic lows. That's it from me this week. Talk to you in the next one.